Good morning, you're watching Businessworld Live. I'm Danny Laurel. It's 10 a.m. this Thursday morning here in Metro Manila. We are about 30 minutes into the trading day. Let's kick off with our top story. The country's budget deficit soared to a record 700.6 billion pesos as of the end of July, topping the deficit for full year 2019. In the 7 months to July, revenues went down by 7% to 1.69 trillion pesos on the back of lower tax collections. State spending, on the other hand, rose 24% to 2.39 trillion pesos on the back of growth in primary spending and an increase in interest payments. The year-to-date figure exceeds the 660.2 billion pesos for the entire 2019 and is nearly 6 times higher than the 118 billion pesos during the same period of last year. For the month of July alone, the fiscal balance slipped into the red with a deficit of 140 billion pesos. UANP economist Sid De Rosa said the fiscal gap is widely expected to balloon this year, but it could have been bigger if the government was not financially constrained to spend more. She says the spending was not enough to cushion the impact of the COVID-19 pandemic on the economy since GDP and unemployment fell by double digits. Kicking off the markets report with our local unit, the Philippine peso. Just taking a quick peek at that, we are actually weakening a touch amid this record budget deficit. You can see us trading at 48.591 to the greenback. This after we had already reported yesterday that the Philippines is planning a $62.4 billion debt in 2021. This is, of course, amid our deficit swelling. So that's also amid the budget for 2021 being up by 9.9%. President Duterte is asking for a budget to be passed of 4.5 trillion pesos. He did say that this budget will be financed by a deficit of 8.5% of GDP on the back of the fiscal gap expected to widen to 9.6% of GDP as our revenue or tax collection starts being faltering. So less tax collections here. So we are looking at a currency that is weakening today. Nevertheless, it's important to note that this was actually still one of the strongest that we've seen in 3 years. Now, I'm just going to be checking in on my Bloomberg terminal here. It seems to be faltering a touch. Let me just try and see whether I can get that back on your share screens here. Another thing I wanted to watch out for here are the global stocks. So let's kick off with the United States and how that had performed. There was an all-time high yet again over in the United States. You can see on my terminal here how the Dow Jones performed. That is up by 0.3%. The S&P 500 as well, another record closing for the S&P 500, up by more than 1%. And take a look at the NASDAQ, actually up by 1.7%. So again, a lot of positivity over in the US, at least overnight. There's an expectation that there will be looser monetary policy Fed Chair Jerome Powell is poised to speak remotely. That's today, so Thursday over in the US. And there was also some positive US economic data coming out. You've got technology shares pushing the Nasdaq Composite Index to a fresh high for a fourth consecutive day. You've also got the United States durable goods orders that came out, and they were double or more than double even of the estimate. So that indicates that factories in the United States at least will be helping to support the economic rebound in coming months. Meanwhile, though, there's still tensions over when you talk about the US-China state of affairs over in the South China Sea. That escalated on Wednesday. You've got Beijing firing 4 missiles into the waterway. The Trump administration strengthening action against the companies that have set up the outposts in the region. Now, elsewhere, you can check out EMEA. The European stocks had also fared pretty well yesterday. That's as German stocks had advanced when the country extended another program, keeping millions of people from losing their jobs in Europe's biggest economies. Elsewhere, crude oil trading in near highs in the past 5 months. You've got Hurricane Laura boring down on the refining facilities and impacting the supply of oil. But if you take a quick peek at how our local index is doing, we're not necessarily enjoying the gains that Wall Street had seen overnight. So definitely not keeping in step with the United States and with the rest of Asia that had seen gains this past week. Take a look at that. We're still below 6,000 levels, albeit rather flat. So we were down by 0.03%. And this follows us ending lower yesterday amid a sell-off on blue chips. So we were down already by 0.4% yesterday. This according to Hayaki Narita of the Asia and Oceania Treasury Department at Mizuho Bank. Markets are getting a mixed bag of signals. So they did mention US home sales were positive, but disappointing when it comes to consumer confidence. So there's still a very mixed picture. This from Chris Mangon of AAA Equities. There's a general lack of confidence from investors. The index is in a clear downtrend in the short term and may continue to test support at, get this, 56.90. Another thing that is to be watched out for here are the lackluster turnovers. We just had over 4.91 billion pesos in trades. That's versus a year-to-date average of 5.81 or 87 billion pesos that we normally see. So again, very, very thin trades. I also just want to take a quick peek at our net foreign selling, outflows building up yet again. We're already on a 7-day streak of foreigners exodus. We are averaging of losing around 580 million pesos every day from our local bourse. I just want to take a quick peek at our sectors here and how we're performing, whether some are outshining. And you can actually see financials doing very well this morning. That is up by more than 1%. Properties as well up by 0.4%. These were a couple of sectors that have been heavily sold off in the past few weeks, actually. I also just want to take a quick peek at who our leaders and laggards are. I'm expecting them to come from the financials and the property sectors here. Recall that there was a lot of news surrounding SM Prime lately on a possible REIT offering here. I'm just going to take a quick check on how our own index players are actually holding up. Now, several stocks to watch as well as I show you guys the best performing stocks, and you can see on your screens here, they are led by the banks. So BPI up by 1.9%, Metro Bank as well, and BDO. So the bank's really rallying here after having been some of the heaviest hit stocks year to date. Now, some stocks to watch. Let's take a quick peek at San Miguel. So we've been watching out for San Miguel even since yesterday. That's after tollways projects, 2 tollways actually were announced, and that they were going to be continuing with that. Now, after this news, we've got some good news, at least for them, in terms of the House panel okaying tax perks for their San Miguel Airport project that's over in Bulacan. So what does this mean? The House Ways and Means Committee has approved a proposal to exempt SMC from all taxes while it is constructing the 740 billion peso international airport in Bulacan. So even during the construction period, they will not have to be paying several taxes. So they will be exempt from things like income tax, VAT, excise and documentary stamp taxes, taxes on real estate. So a lot of things will be exempted. And even at the end of the construction period, the San Miguel Aerocity will remain exempt from taxes until the as soon as it is determined that the grantee has fully recovered its investment cost. Now, this has been a contentious issue, especially when it comes to the finance department, who is of course in charge of collecting taxes. And we just announced, the budget deficit at a record high here on the back of lower tax collections. Finance Assistant Secretary Maria Teresa Habitan said the finance department is, quote, not okay with the proposed grant of tax incentives. So she says this was an unsolicited bid, and under the law, the government must not provide these tax incentives or tax perks. So what our House and Ways Means Committee Chairman Joey Salceda saying, he said that, on its own, the project was already going to be beneficial. It was already a private sector project that would benefit the public, and in return, they were being asked to provide some tax concessions. Gusto kong matuloy ang project na ito, but we needed stronger guarantees, and that's what actually he says that pushed them to approve all of these tax perks. Now, another one that is against the tax perks is Aklan Representative Teodorico Haresco Jr. saying that if the project fails, baka naman delikado yung financial system. So he might actually see a problem with guaranteeing and granting a 50-year franchise and not collecting the taxes from here. So a lot of issues still there. SMC, however, not really enjoying a bump up this morning. It is down 0.2% to 101.20 centavos. So another one I want to watch out for here is Manila Water. This had surged. It was the best performer yesterday. As of course, the Philippine Competition Commission had approved the entry of Razon-led Trident Corporation into the buying in of Ayala-led Manila Water, and that had surged. It's now paring back those gains. It is down by close to 2% to 13 pesos and 82 centavos. Meanwhile, they said that the purified drinking water business will be permanently closed as of October 31. So again, once unit there in terms of the drinking water will be closed, but the entry of the Razon into Manila Water will be continuing. Now, I just want to take a quick peek at two other companies that are issuing bonds. Let's kick off with House. That is, of course, 8990. They are looking at a 9 billion peso bond offering, and they are actually going to be refinancing some bonds that are maturing by the end of the year. So their plan is to sell these bonds only to qualified investors, so it will not need to be registered with the SEC. So recall that they had announced that in the first half of the year, they had a 47% drop in the net income, revenues falling by 30%, and they need to be repaying some debt here. House trading flat at 7 pesos and 90 centavos. Now, here's another one that is tapping the bond markets but has scaled back at least on how much they will be asking from those markets. So let's take a look at SM Corporation, that's SM Investments. They're cutting the size of the first tranche of their debt issuance to 10 billion pesos instead of the 15 billion pesos they were originally asking for. So again, this on the back of SM's earnings dropping close to 70% to 7 billion pesos in the first half of the year. That's on the back of revenues down by 21% due to the impact of the pandemic on the closures of the mall. So more markets later on in the broadcast with Stock Smarts' Marvin Germo. Okay, let's check in on the biggest headlines that we are watching this Thursday morning. I'm just going to be scrolling down here. The country's outstanding debt may reach more than 10 trillion pesos by the month of December. That's according to the Budget Department. The Philippine Star reports that this figure could swell further to nearly 12 trillion pesos next year. That's as the government continues to ramp up its borrowings amid the coronavirus pandemic. All this compared to the government's debt of 7.8 trillion debt stock in the same period of last year. The government is borrowing more to bridge the deficit in its budget, which is expected to widen to 1.9 trillion pesos or 9.6% of this year's GDP. That is due to higher spending driven by COVID-19 response efforts amid weaker revenue generation. The budget shortfall is expected to slightly ease to 8.5% of GDP in 2021, which is still higher than the original program of 3.2%. The government is once again slashing this year's collection targets as its economic activity remains sluggish. The two main revenue-generating agencies now aim to collect a combined 2.2 trillion pesos for the year. That's a fifth lower than the 2.8 trillion pesos collected by the BIR and the Customs Bureau in 2019. The BIR's target was lowered by 3% to 1.68 trillion pesos from the 1.74 trillion pesos revised goal in May. Now, as for customs, collection target for the year is now set at 506 billion pesos, 6.6% down from the previous goal of 542 billion pesos. As of July, taxes collected by the BIR fell by more than 10% from a year ago to 1.1 trillion pesos, while customs collections also went down by 15% to 303 billion pesos. Note that economic managers expect the economy to shrink by as much as 6.6% this year. That's before bouncing back to as much as 7.5% growth next year. Rice farmers lost 40 billion pesos worth of income during the first year of the rice tariffication law. That's according to a study conducted by the Federation of Free Farmers. The group noted that local farmers mainly absorbed the impact of low palay prices. On the other hand, traders experienced a 57.5 billion peso windfall because they were able to shift their sourcing to imports to maximize profits. However, the Federation argued that the promised drop in prices to benefit the poor was not realized. That's because importers mainly bought more expensive rice instead of cheaper ones, which are more affordable to the poor. The group also claimed that rice importers saved 2.5 billion pesos in tariffs after not declaring the true value of their imports to the Customs Bureau. The Agriculture Department has yet to comment on the results of this study. Big investors are holding on to cash, but retail investors with higher risk appetites are playing the market swings. We're focusing on those opportunities today with StockSmart's Marvin Germo. Marv, good morning.
Good morning. Thanks for having me back.
So good to have you back. You've been doing the status quo, diba? This is something that you're enjoying, even as the markets have been turbulent and a lot of people are suffering right now. There's still a silver lining in that there's still opportunities, whether or not it's the short term or long term. If you believe in the story of the rebound, tell us, just taking a step back, what has trading been like in the past 8 months, and especially during this lockdown? In the United States, there was a Bloomberg report saying that retail trading surged 200% because people are trading from home. It seems like a lot of smaller investors are participating. Has it actually been much better when it comes to retail trades?
I think there's also a spike here in the Philippines, but not in the same degree as what's happening in the US, because for US markets, you saw a lot of people who got their stimulus checks also investing them in the markets in general. But since everyone is working from home, staying at home, you can't really go out. Other people are trying to find sources of revenue that they can also do at home. And it's consistent to what's been happening. People have been selling online, e-commerce. Then you also have this possibility of people trading and investing. So because the barrier to entry is not as high, you can start investing for a very, very small amount. That's why you're seeing more and more people start to do it. And it's by the number of people who have been trading, you're seeing more newer investors start since the lockdown also last March.
Which stocks are being bought right now? What are these retail investors looking at? Are they, the quick money opportunities here, sentiment driven, or are they the big blue chips? Are people looking much more long term when it comes to these trades?
I think it's hard to pinpoint what the specific stocks are, because there are some investors that are really looking for the long-term plays. There are some investors also who are buying it just as a proxy to get cash flow from dividends. And AREIT also was a good example that there are people that you're not getting a lot from bonds right now, so better take in the volatility from AREIT because you can get cash flow from that. Then you have people who are trying to trade the markets on a more regular basis. So I think it's a good mix also of people, but the difference that you're seeing also is there's quite an awareness right now that it's possible, it can be done. It wasn't like when I was starting more than a decade ago that people had this
Oo.
notion that you need to be a multimillionaire to invest in the market, that you need to be this sophisticated and know a lot of this jargons in accounting and economics to invest. That being said, also, I think there has to be a balance that it's not as hard to get into the markets, but people need to know what they're getting into. I think the biggest problem also when people start investing is when they listen to their friend, they listen to the crowd. There must be a point that when they start investing, they know it's money that they can afford to lose. That if it goes to zero, they're okay with it. It's money that, in spite of the volatility, they will be okay, because when people are starting, it's all about emotions. When they see their
Mm.
stocks drop and it's their first time to invest, they get rattled, they get to sell at a much lower pace. And then when they start losing money, they totally abandon the market in general. So it has to be a point where when people start investing, especially if they're new, that they have it at the back of their head that there will always be volatility. The markets cannot go up forever. And in the same way, like what we're seeing right now, the markets cannot also stay down forever.
Oo.
Recoveries do happen.
But Marv, I mean, in a normal scenario, and if all you teach Finlit as well, but parang, of course, we know that that savings or the extra money we can use for trading, diba? But not a lot of people will have savings right now. People are losing their jobs, and that's why they're actually looking at trading, in hopes of that giving them more income. Is that an okay thing to do, to actually bank on trading to replace the income that we've lost? Ang hirap naman, di ba?
This may not be a popular opinion, but if you think your cash flow is threatened and you don't have cash, you have debts that you need to pay for, it might not be prudent to invest in the market, especially if you're starting, because there's also a learning curve. Like in any job,
Okay.
profession, or business, investing and trading is also based on skills and experience. So if you're doing it for the first time, and then you're people always think that the stock market is like the lottery, that if I put my money here, magically I'll hit the jackpot and I'll get rich. It doesn't work that way. So my
Mm.
suggestion is, if you think your cash flow is threatened and you think that you don't have enough savings, it may not be a good idea to invest in the markets. Although we want people to invest, but it's not. You have to take care of your personal financial position first, because I'll say this: it's easier to trade and to take and be more aggressive if you know that you have a buffer, you have cash. That if your
Mm.
money in the market doesn't perform the way you want it to go, kakain ka pa rin next month. You will still have money. Your kids will still have money to pay for you can pay for their tuition fee. But if you're using that money for it, we cannot predict how the markets will go. And people have been
Oo.
saying this, that I'm in debt, I'll invest in the market to pay for my credit card debt. Don't do that,
Hindi
because
pwede.
there's one thing that I do know. You don't know how much you will earn 8 months from now. But the debt that you will pay from that credit card, for sure that will happen. So better pay off that debt first before you start investing.
Marv, in a practical perspective, I mean, what's the minimum requirement in terms of how much savings you have, even as a percentage of your equity, to be able to start trading? And I mean, how much minimum capital do you actually need to make this worth it?
I think that's relative also. It always has to come to a point where it's an amount of money that, should there be volatility, they won't be scared to cut, they won't be scared to sell. Or in the same way, if it drops also, and they're not a person who likes cutting losses, that they can live with holding on to it for a long period of time before it starts to recover. So I've seen people who have invested a million, more than a million, they see their stocks go down, they're okay with it. I've seen people who invested 50,000, and then you see volatility and then they're scared already. There has to be a sweet
Okay.
spot, what you could tolerate. But if there's one thing that I tell people, start small. Start with a very, very small amount, then gradually scale it up from there. So it doesn't matter, 10,000, 50,000, 100,000. Then you scale it up
Okay.
and you start getting more comfortable.
Marv, hindi ba lugi with the transaction fees if you just do a small amount, like 10,000?
Well, here's what
What
I
is
tell
there like a balance? Oh, and time, di ba? Go ahead.
here's what I tell people. The transaction fees there, totoo, percentage wise, it may not be as attractive, but in the grand scheme of things, it's not as big also. The transaction fees in the
Okay.
Philippines compared to other markets are relatively cheaper. That's one. Number two,
Okay,
I'd
cool.
rather pay more in transactions fees right now but gain the skill, because 2 years from now, 3 years from now, when I have more money, the skills that I've gained in the past 3 years will be remarkably better as compared to starting with a large amount pero wala pa yung skill doon. That's where money also gets lost. That people have to understand there's a learning curve. There has to be experience. So better do your due diligence, do your dues, and create a framework where, okay, I already know what I'm getting into, then I'll just add more. I'll scale it up. There has to be proof that it's actually working for you, because if it's not, then maybe you can still be exposed in the market, but buy index funds, buy high dividend paying stocks, just buy the REITs.
Okay, that was my next question. What about, like you mentioned, you need savings. You need to be able to feel like you can lose this money if you do want to get into stocks. What about putting your money in bonds? Right now there's a lot of issuances of corporate bonds as well. Even the treasury has a lot of bills, premium bonds, AREIT, as you mentioned, which have dividends. Is this an okay play to do? In terms of, you can actually do that even if your savings are not that much.
Okay, there still has to be a specific cash amount that if there's an emergency, they can pull that out. Anything on top of that, they can invest already, because bonds still are relatively liquid. So if they can project that their cash flow won't be hit, by all means, they can do it. There might be lesser volatility, but just a heads up to a lot of people. When I first started investing in bonds, the retail treasury bond I got was around 7.25%. You're not getting the same returns right now. So I think it's for people who just want something higher than the regular time deposit, that still don't want to touch it. But should there be an emergency, it's liquid enough that I can sell it, even though there's a risk that it might be lower. Should they sell it before the term?
Okay, let's talk about specific stocks here and what you're actually excited about. You already mentioned AREIT. Can you give a comment on the performance of the AREIT? It was down during the first trading day, even as it was oversubscribed naman ahead of that. What does that say about the REIT market? But then SM Prime is also still looking at it, and what does it say on the attractiveness of these instruments for at least retail investors?
Well, based on what you said earlier also, it's pretty evident that the sell down, dropping, was pretty much because of foreign institutions going out there. So I think that's one of the prevailing theme. And it's not just for AREIT, it's for majority of the large cap companies in the Philippines. So if you are a long-term investor and you are okay with the dividend yield, the lower the stock price is, the higher your dividend yield will be. I'm not saying that that's how it should go for every REIT that will come out. They have to study also what's in it. For a REIT, a lot of the companies that are renting for the properties of Ayala are locked into long-term leases. So I think it was around 5+ years, the average lease. So a lot of them are connected to the BPO industry, which in my opinion is still one of the more resilient industries that we have right now. So it will really depend on if there are further issuances. They have to look at where are the buildings placed, who are the tenants, the quality of the tenants, how large the companies are, their ability that they can actually think that 1, 2, 3 years from now, those tenants will still be there. So similar to AREIT, I think that's the underlying advantage of AREIT, is because their tenants are connected to the BPO industry and they're locked for long-term leases. And if they leave, they have to get out of that lease. They have to pay also penalties attached to it. So it's still a win-win for Ayala should things go bad.
How can you compare AREIT versus Ali? Which would you prefer?
I think it's a different play. If you buy Ali because you want growth in their whole property development space. The thing about Ali though, since we are in this new normal, it will affect whatever growth that they have in terms of property development, in terms of the areas that they mapped out. But for AREIT, it gives investors a more stable return, because people need to know this. You don't buy AREIT for growth. You buy it for cash flow. So if you are into cash flow, you buy AREIT. If you're, in my opinion, a property will be one of the most hit. In banks will also be hit. Airlines will also be hit. You buy Ali knowing that when everything will reverse later on, when everything will recover, the stock will also get better. But you must be willing to wait. Since there's still no end in sight on how this will go. If you are positioning right now, it might be a longer, relatively longer waiting period for you until they recover. So that's how I would look at it. AREIT is for cash flow for today. Ayala Land is for under the prospect that when things get better, earnings will come back and the stock price will follow.
Okay, Marv, before I let you go, you were saying offline, you've mentioned that pick the ones that will thrive in the new normal, diba? So the ones that are essential goods, pure gold, for instance, Tel, Globe, these types, but these are already the highest ones year to date. How do we know? Is it still worth it to be entering? And how do you know that it's still going to be going up? Because people are quite scared to enter now. Na parang baka nawala na yung rally, diba?
Well, it's true, no, that they're relatively at the higher portion already, but similar to PLDT from a technical standpoint, it wasn't a very, very long downtrend. And just a couple of months ago, it started to reverse from that downtrend. So from a technical aspect, it's at a much better position now than where it was a couple of years ago. That's one. Number two, they could peg it in terms of the dividends that they're getting. I think for PLDT, it's around 5 plus based on the prices yesterday. For Globe, it was around 4 plus dividend yield. So if the dividend yield is acceptable for them at that current level, then they can go for it. But of course, if they know how to wait, if they can wait for pullbacks, they can wait for corrections for an acceptable yield, then go for it. So I'll quantify it, Danny. They can segment their trades into two. Number one, they buy the ones that thrive, but they have to still be strategic on how they enter. At least that one, they know the earnings could be predictable this year, next year, and a year after that. Or they buy the ones that won't really do so well, but they have to wait a longer period of time until earnings would come back in those companies. So I think that's how they could segment their investments.
Do you have a target price for Tel?
Let me check my charts right now.
Go ahead. We have it open right now on the terminal also.
Okay,
just for the breakout.
So for Telno, one of the things that's so interesting about it, it just broke out of the 1365 level just last August 19 to 20, that particular week. So if the breakout continues, I'm seeing the next resistance around the one. I'm seeing the next resistance at around the 1551 level. So the move to 1551 is predicated on if the 1366 would continue to be would continue to solidify itself as a support. But that being said, while I'm saying this, the trend is up. The tide is towards PLDT pushing higher. So one thing that traders could watch out for is the 1369 level, if that would particularly hold. And if that holds for the short term, it could possibly move to the 1551 level.
Okay, so still some upside here for the best players year to date. And also be careful when you do your trades. According to Marvin Guerra, don't just jump into the market. Test the waters first, start small, and then learn your expertise. Thank you so much for those insights. That was, of course, Marvin Guerra of StockSmarts. And that's a first look into the business day. Today is August 27, 2020. Catch us again tomorrow morning. I'm Danny Laurel, and we are One News.